Good morning, traders, and welcome to BCI's morning market analysis. Let's have a look at the US dollar index first. The US dollar index extended its upward momentum last week, climbing to 98.95, which is its highest level in nearly 3 weeks. That comes as investors respond to signs of economic resilience. Recent data showed inflation ticking higher, retail sales rebounding unexpectedly in June, and jobless claims falling to a 3-month low. Altogether, these reports suggest that the US economy remains firm despite tariff related headwinds, allowing the Fed to delay potential rate cuts. President Trump also reassured markets by confirming he has no plans to fire Fed Chair Jeremy Powell, even as he continues to criticize the Fed's pace on rate adjustments. So far this week, the dollar is up 0.6%, on track for its second straight weekly gain since May. Technically, the index bounced from its recent 3-year lows, pushing above the key resistance at 37.8 and 39. It's now testing the 55-day moving average near 98.93. A daily close above 98.95 could open the door towards 99.42. The June 23rd high, and potentially even the psychological 100 level. Immediate support lies around the 9-day moving average at 98.07, followed by last week's low of 97.76. Next up, let's have a look at WTI. WTI crude slipped roughly 2.4% last week and is now hovering around the $66 mark. Prices saw a brief upside following a drone strike in Iraq's Kurdistan region, which halted production at the Norwegian oil site. Despite the geopolitical risk, the US has yet to take any major retaliatory steps, keeping the region relatively calm for now. Meanwhile, US crude inventories declined, signaling solid summer demand. Any gains are still being capped by uncertainty over global trade. President Trump said that he plans to send tariff notifications to over 150 trading partners, which could weigh on global growth and, by extension, energy demand. From a technical standpoint, crude remains in an uptrend and is now trading above the 550-day simple moving average at 65.1. Still, the rally has lost some stream after failing to break key resistance levels around 67.08 and 68.36. A decisive move above the 200-day moving average at 67.88 could shift focus towards the $70 mark. On the downside, strong support exists around $65, backed by confluence with the 65-day moving average at 63.99. Next up, let's have a look at spot gold. Gold traded in a tight range between 3310 and 3375 last week and ended lower for the first time in 3 weeks. Robust US economic data, including stronger retail sales and lower jobless claims, eased pressure on the Fed to cut rates, dampening gold's momentum. Fed Governor Adriana backed a steady policy approach, while Mary still expects two cuts this year. At the same time, Trump's plan to increase tariffs on 150 trade partners, along with ongoing geopolitical risks in Ukraine and the Middle East, are keeping gold's safe haven appeal intact. Technically, gold has bounced off strong support at $3,300, while resistance remains at $3,375. Prices are caught between a firm dollar and geopolitical risks, with sideways price actions reflecting this tug of war. A breakout above or below this range will be the key move for the next week. Lastly, let's have a look at the Australian dollar, which declined by 1% last week, briefly dipping to a near 3-week low of 6,454 before recovering. The bounce was driven by a surge in iron ore prices after China's June import volumes hit a 2025 high, fueling optimism around Chinese demand and stimulus. This boosted commodity-linked currencies like the Australian dollar. The pair is still on track for its first weekly loss in 4 weeks. Rising expectations of an RBA rate cut in August following weak labour data are weighing on sentiment. At the same time, political pressure on the Fed has limited US dollar strength, offering the Australian dollar some support. Technically, the Australian dollar remains in a rising channel, but the RSI near 50 suggests momentum is fading. The pair is trading below the 9-day moving average at 6534. If 6454 is broken decisively, downside pressure could extend towards the 64-cent level. On the flip side, a move back above 6534 may open the door for a retest of the 8th month highs of 65.66 cents. That's all for the morning market analysis. In summary, global markets remain cautious as investors digest mixed economic data, trade policy risks, and central bank signals. Key support and resistance levels will continue the next moves as traders watch for further data and policy updates in the days ahead. And as always, manage your risk and happy trading.